Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. On Thursday, March 25th, it is about 12:07 Eastern Time, and this is going to be a quick one here, but wanted to provide an update. Today is the COMEX options expiration, and there are some clues about what's going on. As we can take a look at here, there's a chart that is a true felony, whether the CFTC is a part of it or recognizes it or does anything with their investigation. But they've had evidence about stuff like that for a while. So anyway, they can't say they didn't know yet. Let's go back over here to the chart where you see silver bid is 24.93, ask at 25.04, at least on the Kitco chart. And then here, it looks even more pronounced here. You can imagine all the people who got stopped out, who had stops in at the 25 level, who got hammered out of them right there. Then it shoots right back there. And if you look at the CME Group website, here is the option board. And up here is the 25 strike. So you see there is a 1,138 contract open interest on the 25 strike. Again, these are generalizations, although it seems there's a long track record of correlation. And certainly if the CFTC is investigating this stuff as they say they are, they can look into those records. I'm not sure why they can't be transparent to everyone yet. Traditionally, you have the banks shorting the options. So the 25 strike, if the price finishes below 25, then the writer of the option, the seller of the option, would collect the premium as the contract would expire worthless. So certainly you wouldn't, if someone were able to push the market around or spoof it in a direction, they would not, if they were short the 25 line, would not want the price to rise. Now, if we take a look at the other half of the board, by the way, this is as may be expected from anything related to, I'm already in the puts, related to the COMEX. Normally you have like the puts and the calls next to each other. Another highly inefficient setup here with this whole gold and silver. What you see there is some puts at the 25 strike. It's $25.25. And then more at the 25 strike. So if you're short the put, you lose when the price starts going lower. So you could say maybe conceivably somebody, if they were short, would not want the price to go below 25.25, certainly not below 25. Now, again, this is an imperfect science, but when you look at basically the way we looked at it in option world was we would think of options essentially as a straddle, which is if you buy a call and a put. So the 25 strike straddle, so $25 right here. Essentially, if you, let's say, let's call this 25 bucks. If you buy the straddle for 20 cents, let's say the call and the put are each a dime, then if silver finished above 25.20, or below 24.80, so outside of these two boxes, if you paid 20 cents for that straddle, the farther it goes out, the more you win. So the guy who's selling that at 20 cents really hits the home run. Things expire right at the 25 strike, which is my guess is that by the time this closes today, you'll probably see it pretty similar to what you see in these previous 2 days there. One last note I will mention is that when I was trading on the American Stock Exchange, then we moved over to the New York Stock Exchange, there was a guy I was friends with who later went on to trade sugar. I don't know if it was the NYMEX or the COMEX, but you got to remember a lot of the traders there, at least back in the day, maybe less so now, were local guys, they would call them, smaller traders who were trading with their own money. And so if you didn't know how to hedge, because if you sell or if you're long that straddle and it pins, you don't know, well, whoever is short doesn't know exactly whether they're going to be assigned or not. We won't dig into the details of that. But basically, if you get pinned, this guy found just consistently was like it was almost spooky that the way right around the option expiration that things would react. Now, again, he wasn't trading silver. I was asking him about silver, but everything that he described from trading sugar, I believe it was sugar. Pretty sure it was sugar. But everything he described matched what we're going through here in the options. Again, you can go back about a month ago, did a similar video during option expiration. And, there is, again, it's not a perfect science. I don't know if they can push it exactly to $25 even, but I wouldn't bet against it either. We'll see how it plays out. By all means, this is not legal trading advice. This is just more investigation and trying to understand why and how some of these things are happening. But anyway, something to keep in mind. Keep updating it each month, and I'm sure we'll have more to share about this. Quick note before I wrap up, coming up on the show at 2 p.m. Central will be Rafi Farber, dig into what is happening on the COMEX. Then later at 5 p.m. Central, we'll have John Adams providing an update from Australia, what he's heard with all of these various reports that are going around. So hit that subscribe button and the notification bell, and I will see you again soon.